Okay, so comes a bit odd. We'll get to it. So what if there was a safe way to invest in cryptocurrencies? So the both question that I'm asking is basically, what is the safe alternative to fiat money and to cryptocurrencies? So we are introducing Agau. This is the sign of Aztec sign of gold, right? And we try to modify it a little bit into a chain and modernize it. Okay. So Agau stands for gold and silver from the periodic table. AG for silver and AU for gold. We are launching 2 coins. So Agau Gold is backed by 1 gram of gold, and AgAu Silver backed by 1 gram of silver. Okay, so a little bit of a background and historical, because apparently I cannot speak about blockchain without speaking about Satoshi. So basically during the financial crisis in 2007-2008, we've seen a trend of libertarian ideas, but also somewhat of a trend of loss of confidence in institutions such as banks and governments, and we see that also today in the US. In 2009, at the very heart of it, Satoshi Nakamoto, which is a pseudonym for the inventor of Bitcoin, released a white paper, which is the paper explaining what Bitcoin is about and what is the mechanism. So the title was Bitcoin, a peer-to-peer electronic cash system. Right? So up front, it was clearly designed as an alternative to fiat money. Some of the first transactions were actually mentioning bailouts and central banks. Since then, fast forward, you see a lot of cryptocurrencies who have more than of thousands and billions of dollars have poured into the cryptocurrency basically train. So today the challenge is really to determine the value of those cryptocurrencies, and particularly the intrinsic value of any, if any, of these cryptocurrencies. So we are positioning Agau as a true alternative to fiat and crypto fiat. So what we're trying to do is really to take the ideology behind Bitcoin and push it to the next level, right? My personal belief is if Satoshi could, maybe he was actually envisioning having some sort of a gold standard because of the ideology that is usually apported to it. So gold and silver have been the longest, historically, they're the longest being considered as money, right? It's only actually a couple of years since the Bretton Woods system stopped. And so what we have now is that the distributed ledger technology allows today to efficiently return to the gold standards, only instead of using paper, we would use digital currencies, and also because of smart contracts and a lot of the disintermediation that we see on central points of failure or centralization of decisions, we can enable ourselves to issue kind of a non-governed gold standard that cannot be debased, right? So I'm just going to let Mark Carney, the governor of the Bank of England, who not so long ago issued the Future of Money, and I will let him speak for a little bit.
Let me start with a few definitions. In The Wealth of Nations, as I suspect Sean, all of your students know, Adam Smith defines money by the roles it plays in society, in particular how well it serves as a store of value, as a medium of exchange, and a unit of account. And these functions operate in a hierarchy. There are many assets that people view as stores of value, houses, for instance. But those aren't necessarily used as media of exchange. By comparison, an asset can only act as a medium of exchange if at least 2 people are prepared to treat it as a store of value, at least temporarily. And for an asset to be considered a unit of account, it must be able to be used as a medium of exchange across a variety of transactions transactions over time by several people. And this hierarchy points to the reality that money is a social convention. We accept that a token has value, whether it's made of metal or polymer or code, because we expect that others will do so readily and easily. The tokens representing money have taken many forms over the millennia, from cowrie shells in ancient times to cigarettes during the Second World War to mobile phone units, mobile phone minutes in modern Kenya. Most forms of money, past and present, have nominal values that far exceed their intrinsic ones, a gap that has meant that money has a long and sorry history of debasement, particularly private money that has inevitably succumbed to oversupply and eventual collapse. But Adam Smith worried also about the potential debasement of public money, and for good reason. Throughout history, governments would often betray the trust of their citizens, be it Henry VIII, reducing the precious metal content of his coins during the Tudor era, Pitt the Younger depleting the gold vaults of the Old Lady during the Regency period, or a pliant Reichsbank financing the government in Weimar, Germany. With the wisdom born from such sad experience, most countries have now settled on centralized public fiat money, backed by robust institutions.
So backed by robust institutions, some people will argue sometimes these institutions are not so robust, and as we have seen in the past, you do have a lot of debasement. So I'm just taking the chart again of the three functions of money, and here it's important to notice we're talking about fiat money. So what we do here, and it's also funny that we are coming back to the wealth of nations, because in the wealth of nations, Adam Smith also talks about first what is wealth, and funnily enough, it's measured back then in gold and silver. So we are adding a fourth tenet of AgAu, which basically allows us to have all of the properties of the store of value, medium of exchange, and unit of account, thanks to the technology, and add on top of that the intrinsic value that we believe money should have. So what is the distributed ledger technology, or what someone call blockchain 2.0, is a smart contract. So smart contracts are basically a normal contract, only except of having it in a written form, we have it in code. And this is somewhat now taken as a revolution, because it enables people to have a trustless system, meaning one does not need to trust the counterparty, because the code is low and the code will execute itself. It's decentralized because you have a system of many machines connecting into that chain. Think of it of a cloud. Instead of having a cloud and one point of information, you have a decentralized point of information of everyone sharing that piece of information, so that if one point fails, you still have a constant verification. The privacy comes from the fact that the wallets holding those are anonymous. Now, you can argue on the privacy that can be reverse engineered with AI or so on, but the fact of the matter is, so far, you do not have a name attached to a wallet. It's immutable because the chain of information is being verified of every transaction, the past one and the current one, and it's basically using the magic of IT, of straight-through processing, that also enables to remove a lot of the human error. Okay. Now, we do have a competition. I expect a lot of questions, and I'll be more than happy to answer them. But we do have key differentiators. Ideally, a normal gold and silver traditional buyer would buy 1 kilobars of gold and silver. Now, you also have ETFs, and we are introducing gold, allocated gold on the blockchain. So the first differentiator is we are purposely making an investment in allocated gold, which means this gold cannot be swapped, cannot be leased, and we will speak about that a little bit later. You can have direct ownership when, in the case of gold and silver bars. Now you have to know 95% of the gold is not that is traded in the exchanges is not allocated. Now the unit of account here is basically, you would like to have the gold physically, but again, for the same purpose that we had the gold standard on a paper, we now have it digital because we can divide it into different pieces, and so that's one of the purposes of having it electronically, so that you can trade it more easily. And of course, as I said before, and I will explain a little bit more on details about the allocation of it. It's also important to notice that we are decentralized from exchange, and one of the big plus is based in Switzerland. Yeah. There's a joke about Switzerland. It says the advantage of living in Switzerland is that the flag is a big plus. So allocated versus unallocated. In one sentence, 95% of the world traded is unallocated, and buying unallocated gold or silver turns the buyer into a creditor. So the financial institutions will then owe the customer the precious metals that he does not own. So in other words, even if you buy the physical gold in a vault, if it is not allocated, you're holding a paper of an IOU, essentially. So what are the three implications of this? The first one is, as it's mentioned clearly, unallocated gold turns you into a creditor instead of a loaner. Allocated turns you into a depositor, and you have the real property of the gold. The second implication is that unallocated precious metals will be classified as a credit, and therefore can be used for liquidity reserve. One anecdote is, for example, in 2009, you see the economic crisis deepening, and yet gold was not necessarily moving up. Well, one of the reasons for that is because gold was used as a liquidity reserve, and so the banks could essentially use that to dump it quickly on the market to have cash. So that's kind of like the educational part that we also try to achieve with this. And again, like precious metals in different jurisdictions will rank or not as a deposit protection when you see the bank failing, for example. Sometimes you will be compensated to a certain amount, sometimes you will not be compensated at all, you will just rank as a creditor of the bank. Okay. Whereas if you have it allocated, it's just your property. So that's the point. Then we have the ETFs, and in this case I'm just simply using the prospectus of the GLD fund, that is a $36 billion fund based on gold, yes, and it's backed by physical metal, yes, but partly of it, it's partially allocated, it's partially unallocated. The other big difference, and this is not the only one, but in the white paper there's a list of different clauses in the contract that are somewhat questionable. For example, this one that essentially says that as a trustee, you cannot ask for an audit even if you were to pay for it. There is a possibility that they refuse auditing it, and we are assessing this also in our case. So what is the model? The model is 1 gram of gold for Agau Gold and 1 gram of silver for AgAu Silver. Both are the representation of allocated metal. So essentially you would have a batch of 1,000 grams that would be allocated to 1 kilobar, and that kilobar would be saved in a private vault in Switzerland. So we have the physical, we have it audited, and we will be auditing it and inspecting it and putting it in the blockchain for everyone to see. So, so the list of the holding will be published on the ledger. So what is the target market? Well, we have the traditional precious metal buyer, that is the institutional investment, the family office, the private investment portfolio, and we've seen already an ETF that has $36 billion value. The other natural investor would be the crypto investor, the crypto millionaire or the crypto billionaire, who would be trying to find a coin that would be hedging for the volatility of the cryptocurrencies, also a currency that they could stay on for the intrinsic value, the portfolio diversification, of course, and the liquidity. I usually say, well, my coin will be, both of these coins are for the FUD and the FOMO. So the FUD is the fear, uncertainty, and doubt when all the market of these fiat crypto, that's how I call them, crashes, they could buy into that. And the FOMO is basically the fear of missing out of the retail investor that usually comes in after, either because they want the physical gold or because they want to participate someone in between. There is also some utility of it, particularly in emerging countries. So I come from Mexico and too, but we see that in Mexico you would usually buy centenarios or gold and silver coins. You would stack them, but you still have criminal activities, essentially people stealing them. So you would stack your gold, your silver, and your dollars, but then they could steal it. So here is the point is saying, look, you have it safe in a vault in Switzerland, and you can redeem it, so you still have physical possession of it, but you don't, it's safe, right? The other is, and this is kind of related to countries that have a volatile fiat currency. We had the example of Zimbabwe and more recently of Venezuela. The cryptocurrencies are being used there because even with the volatility that they have, it's still better than the fiat currencies that they have. Also, because you only need a phone to trade crypto coins, it is a big enabler, I would say, to bank the unbanked. And also, would we become a world currency? It would allow for transparent pricing, so that countries that are developing could price in gold and silver, and so it's quite transparent of the value that it's provided. Okay, so then this is the target operation model. Essentially, you would come in and through an ICO process, you would have fiat money and fiat crypto, that's how I call them, that would come in, and from there you would release, you would buy the physical asset, create the list and allocate it to the gold bars, release the tokens, then the tokens would be exchanged freely on exchanges or from wallet to wallet, and then there would be a redemption process so that you could redeem your coins back to gold and silver. So we have next what it could look like to exchange your Ethereum for Agau, and so it would be quite straightforward, right? So you would put your cryptocurrencies on one side, and you would buy this coin. Now the finances, you see a lot of ICOs out there who would be, for example, 30% backed in gold, or even less if they're a scam, or a lot of other cryptocurrencies where you see allocations of the ICO that are somewhat questionable. Here we really want to back the coin as much as possible onto gold and silver. So we will put 98%, if successful, on buying the precious metal. We are only using 1% for basically building the system. Of course, we have a marketing budget, a big budget for legal also, just so that we can make this work out. And I think that's also appealing to people who want to have a coin that is really representative of. Now you have to know that when you buy gold in the market, usually there is a premium. So we have also a revenue model, right? So as you see, we have 2% minimum on the premium on spot purchases. We have storage costs. So because it's allocated, we do have storage costs. Some who claim that they do not have storage costs, I would try to look at these coins and say, okay, is it allocated or is it not allocated? And then we put a 0.03% on the transaction fee. So depending on the model and depending on how much we issue, we would have a different revenue model, but essentially we aim to make money from the beginning. We are not counting redemptions also, and we're not counting arbitrage. So what is arbitrage? It's essentially when the coin is overpriced as opposed to the net asset value of the asset it represents. It would basically create an arbitrage opportunity when you would sell one asset and buy the other. In this case, we would essentially buy more precious metals and issue more coins. Also on the redemption, we would redeem, we would expect to buy back the coins and so do multiple ICOs. So if you've seen the video on the website, we're planning on doing multiple ICOs so that we slowly replace fiat money, which is the point of this thing. So the team, I'm the founder and managing director. Luis here is my co-founder and COO. We have a tech advisor who is helping us on the technical side. We have a team of 15 developers in Mexico who are both working for this project and the next project that you will see. Alain is probably going to turn up a little bit later. He's also an advisor on the crypto trading side. He has a whole team of crypto trading with CoinLab Capital. And Citlali Arias is basically she's my cousin, and she is an official in the Navy. She's always traveling, so marketing is pretty good for her. And we don't have only men in the team. So we also planning on outsourcing part of the marketing to other companies. And we're also working on partnerships with audit firms to handle the legal aspect of this, as well as some vaults that we are currently working on. Hopefully, in April, we will be doing some major announcements for both legal partners and vault, which whom we are currently in discussion. So that's pretty much it, and I'm open for questions and anything. Thank you very much. So, any questions?
So if I understand correctly, when you issue the coin, you sell it for 102% of the value of the gold.
Sorry, say again?
When you issue the coins,
yes,
you initially sell it for 102% of the value of the gold to cover for your cost.
Right. So to be clear, 98% of whatever we raise will go to purchase the gold and silver. Now, of course, the more money we have, the more we can negotiate on the margin of the seller.
Yeah,
right. And the 2%, and yes, there is a 2% premium essentially on this that we justify by some utility value of the coin, and basically to finance the project. Yes.
Yeah, so that's how you fund yourself.
Exactly.
Is there anything, like cryptographically speaking, tying the coin to the physical metal?
Yes.
Is there a link or something?
So, on the one side, there's different processes. One is an audit process that will be on the blockchain, allocating the gold to the different batches of coins. There will be also another basically public chain where the quarterly audits will be fed in. so you will see what is what, and essentially with the smart contracts, what we are achieving is proving on the one side the assets and on the other side the coins. So we cannot print coins if we don't have the backing, right? And that is what the smart contract is trying to achieve.
So in essence, if I buy one of your coins, I buy a gram of gold, and you take over the hassle of storing it, protecting it, and all that, right?
Right.
So, but then you give me a piece of code or like a number and figure combination. But what's the difference between that and giving me just a piece of paper which says?
Well, there's many differences. First of all, is you can divide that coin into multiple pieces of paper and essentially use it as money, right? The other one is, because you're buying it with a lot of other people, you can have a better deal when it comes to the storage, right? And the utility value of it, let's say, for example, you see a lot of crypto investors buying into that coin. You have a premium that can be enabled because of the utility of having a coin that can be used as money and is perhaps more liquid.
It's more liquid than an ETF or something like that.
Exactly. So it's meant to be a means of payment, right? And so there is a utility value on this, particularly when you see what I believe is a bubble on the cryptocurrencies. You could see a very big premium on that side, just because you can use it as normal currency. Just to give an example, in Zimbabwe, bitcoins are trading for more than 30% premium because it's harder to get there. Here, it's almost like I said, we're not trying to compete directly with the Swiss franc, which is more or less a stable currency. I think where it becomes appealing, it's on the emerging markets, and that's where you could see a highest demand. In other words, if you're already a gold buyer, the question is, would you rather have a piece of paper or would you rather have Agau? Knowing that it's backed by the intrinsic value, you can see a utility premium on the utility of having money.
What about the quality of the gold? Do you have already a process with it, or you already work with special structure? Because the problem is usually on gold, apparently there is they have some two metal that, and usually you go for they need to melt it to really detect that the gold is really gold.
Right. So all the gold that is purchased is good for delivery standard of the LME, essentially. So it's already in the banking system, and because we're working with vaults and refiners to make sure that, well, first of all, that's a good question, because you never have a bar that is exactly 1 kilo. So the weight and the quality and the purity of the bar will be calculated also on the back of it. And we do charge a premium on the redemption. Now you have to know that if you actually know the gold market, when you remove the gold from the system, when you put it back in the system, there usually is a requirement of verifying the content and the weight of it. And sometimes you can lose 15 or even 30% of the value of the bar just by testing it over and over again. So in this case, we already have certified gold. Yeah. Any other questions?
I have another one. I mean, you were referring to it because you said you can have a premium on cryptocurrency because, for example, the people in Bitcoin, they actually don't have liquidity, so and they don't have product to buy, so they will have to monetize their Bitcoin, so they go for the gold cup at the AgAu Gold, so you can have probably a massive premium, especially at the beginning, if you want to monetize.
Well,
you mentioned that after this premium, you will try to buy again some gold to increase the value of your storage of your collateral. But what I do not get it is that because of the coins are supposed to not belong to you, they belong to the client. So how do you this premium, how can you buy against some gold to put in the storage? Or maybe I do not understand what you were mentioning about this because they are traded with a premium compared to the gold. So
yes, we're just an intermediary. The possession of the gold is not us. So what do? What we do is essentially we do more ICOs, right? If we see some demand and the premium of it shoots up, that means there is demand, right? And that might be a possible initial situation because there might not be enough agaus produced, and so therefore you would see a high demand. So you do more ICOs at par value, meaning you do more ICOs of closer to the price of 1 gram when you see a massive premium, because that means there is demand, and of course people will be buying those, right? So that's how you solve that problem. But it's true that when you would see this, like the FUD, right, the fear, uncertainty, and doubt, you could see a massive inflow into real assets, right? And that's also, we're basically trying to do a better ETF and a better cryptocurrency. And my personal belief is that, my vision is that if Satoshi would buy with one of the first coins, that coin, then that would be a validation of, yes, this is my, so this kind of my
having directly a processor issuing instead of doing
it's an ICO, so you do more ICOs.
Directly, like this, instead of having because the ICO process is still a long process.
Yeah.
In the meantime, maybe the price is crashing. Why not having an automatic way of issuing some new coin?
So the idea within the boundaries of the technology, right? Within the boundaries of the technology, the idea is that you can buy the coin and issue it as fast as possible so that it's backed, right? Now, another question I get a lot is what's the difference between these coins and other coins? So there is other coins in the market that are also backed by physical metal. Some of them are questionable. They're literally scams. Some of them are not 100% backed, and some of them are just not allocated. So we try to narrow it down to the lowest level of holding gold as you were supposed to, right? Which is we want to have purposely the allocation of the gold, and maybe perhaps have the downside of it, which is paying the vault and the storage. But on the back of this, once it becomes bigger, you have a better possibility to essentially reconstruct a whole new banking system, only this time based on this coin. So we could have a crypto bank after that would say, okay, you can deposit your gold coins to this, and then it would compensate you for the storage, so therefore you don't pay the storage anymore. But then the bank would use the funds for peer-to-peer lending, or for escrow accounts, and so on and so forth. So, that's the idea: is narrow it down to the lowest common denominator, and then build on top of it. Right?
You were mentioning that your aim is that AgAu becomes a means of payment.
Mm.
That means two things have to happen.
Yes.
You have to build a community, and you have to attract merchants.
Mm-hmm.
How do you do that?
So the merchants is, we're not going to reinvent the wheel, right? I think a lot of it comes to partnership, and hopefully you will see some announcements in April on different sides. One is who is backing us in terms of institutions, right? If you have a big vault that has a reputation for more than 100 years, and so on and so forth. For the merchants, I think it would be building the ecosystem of for example, in Mexico, there's Oxxos, basically shops everywhere. And then they could build an interface so that you could buy cash for AgAus and AgAus for cash. And that would be, they would probably take a margin on this, but that could enable you to just basically popularize it. You know. And then the other thing is, because we are issuing a massive amount of it, right? If you do only a 5 million ICO, right, then you would only have 5 millions of those, right? So we try to have a big ICO on the first place so that you have as many people holding those tokens, so that by itself it already builds up with people.
I think there is a misconception in what I've perceived cryptocurrency usage of what you do and what you're describing. To me, the merchant is not the exchange. The merchant is Amazon. How can I use your currency to buy a book on Amazon?
Well, again, I think it comes a lot with the partnerships, and it's a very interesting question, but this is how I would pitch to Amazon. Would you rather have someone giving you a Bitcoin, or would you rather have someone giving you a Bitcoin that is backed by gold? So you yourself as Amazon, would you rather have a currency that is less volatile and be paid in gold, or would you rather not? Other thing is the exchanges. The exchange themselves, they hold massive amounts of Bitcoins. And one of the things we're working on in Mexico also when it comes to money exchanges, so basically the money exchange traditional shops, we're working on partnerships over there as well. Some of them are even interested to do an end of day backed by gold, because what they would do is they would come out of the fiat currency and have their treasury basically based on gold, because the volatility is lower than certain others.
I understand what you're saying, but are you speaking to Amazon so that they would accept your coins as payment?
I will be speaking to as many people as I need to, and of course a lot of it is democratization. So Amazon would be one, but everyone else would be, right? I think.
It's an example.
Right, exactly. So, but I think there is a market for it. The mere fact that merchants are accepting Bitcoins, I think it would be quite of an easy sale to say, well, why don't you also accept gold and silver?
Wait a second, couldn't that be deflationary?
So
couldn't that be deflationary?
that's a very good point. Gold standard has been tried, and a lot of economists would say it failed because of its deflationary. That's a valid point. That's also a point that's being discussed between Austrian economics and Keynesian economics. In this case, there is a deflationary aspect because clearly it's gold, and yes, some people would see it as an investment. It's also inflationary in some form because you have a storage cost. So it's actually inflationary because you do pay 0.5% on the storage cost. Now we can work on mechanisms to make it, as I said before, a bank. But in and of itself, it is actually inflationary as it is set up as a basis. Only you don't have a central bank deciding how much is going to be inflationary. It will be set up in the code so people know already.
And how do you have, imagine I buy one of your coins and I hold it for 10 years.
Yes.
How do I pay that storage cost over the 10 years?
So the storage cost will be included in the chain as a native property of the smart contract that would take off 0.5% divided by 365. So at a random time of the day, you would take off, because we think it's the fairest way. Otherwise, you would open to arbitrage into me giving the coin to him just before the fee is getting paid for.
So does it mean that initially I have 98% of gold, and imagine, and you say it's 0.5% of cost. So after 1 year, I only have 97.5% of gold.
No. it's always going to be 1 coin, 1 gram. Okay, and
You
that
have
will
less
never
and
change.
less coins, right?
And that will never change. But you will have less of a unit of a coin.
Yeah,
Because-
same effect.
Because it's the same effect, but a full round coin would always be 1 gram. So you're basically paying in gold. That's what you're doing.
Basically, I'm investing in gold, right? From an
Yeah,
investor
exactly.
point of view. So, but say I want to buy a kilogram of gold.
Mm.
I can buy it from UBS or I can buy it from Thierry.
Yeah.
No offense, but UBS feels safer.
Yes, it can feel safer. Okay, that's a point taken. But this one is using the blockchain technology. So essentially, it's a Bitcoin. It has the properties of Ethereum, and so that enables you to use it as many other ways that you would not be able to use your certificate with UBS.
Mhm.
The other thing is, it's allocated. Now, I don't know what your deal will be with certain banks, right? But you would usually find that having it not allocated, you would have a better deal.
Mhm.
Other thing is, you're not buying it alone. Let's say you want to invest 5 million. Here, we use the scale of 500 million because we're all buying it so that we can negotiate a better rate on your storage cost. And honestly, it will be the same because I am not the property. I don't have the property of it. The smart contract links you directly to it. So you will not be dealing with me. You will be dealing with the vault directly.
Mhm.
So that's also the value. I don't have let's say an intermediary collateral danger. Basically, if I collapse, you would still have the coin,
Mhm. Mhm.
and you would still have the title of property.
Mhm.
How can you exchange it back?
How can you exchange? So this is a mechanism we are working on. Like I said, there will be a process for it. Now we're starting many processes. I might not go exactly in the detail, but essentially it's a case by case. Because if you want to extract 1 ton of gold, the logistics, the costs are not going to be the same than if you want to redeem, let's say, 100 grams. Most likely we would put in place a system so that we can just ship it over to UBS from DHL or UPS or something. So it depends on how. Essentially, you're buying directly from the seller. Now the advantage here is that you have a scale, but you have many other advantages. You have the fact that it's based in Switzerland. Not everyone has access to that. Like in foreign countries, and you basically using the properties of the smart contract to make it easier and more accessible.
Are you under the AMA regulation? Or
Sorry, say again?
are you under the anti-money laundering?
So there is a KYC AML process, so know your customer anti-money laundering process when you buy the coin, and then at redemption there is also an anti-money laundering process. Yes. Now we're working in different forms of how to handle that, but essentially, clearly our goal is to issue as many coins as possible, and most likely we would buy the coins back from you so that it doesn't get destroyed, right? And then we would issue you the gold that corresponds to those coins, so that we then use those coins and then we would do an ICO again, so that we don't have to sell the gold. In the event we have to sell the gold, we would reorganize what in the system the allocation, so that we can burn the coins and release the physical that is backing it. Okay. So thank you very much for everything. I think we're going to the next project. That's very exciting. Stakes. So I'll let Luis do the rest.
Okay, I'm gonna set it up. If anyone wants to go ahead and help themselves to a drink, please go ahead. We have stuff outside. Should take about 2 minutes.
We did one day of Russian.